Should you buy gold or should you buy silver? There's a little known subject called the gold to silver ratio. Hey everyone, welcome to Campbell's Coins. We are discussing silver and the silver mania taking place today. A lot more people are interested in silver than have been before, and not many know about the gold to silver ratio. What is the gold to silver ratio, and how can you grow your money with the gold to silver ratio? I've touched on the gold to silver ratio in a previous video, and I talked about trading your silver for gold when the gold to silver ratio falls below 20:1. But is this number feasible? How do you do it? When do you start, and what do I personally plan on doing? We will go over all of this and more coming up. Alright, before you have 1 ounce of gold on the right and 66 ounces of silver on the left. This is to signify the gold to silver ratio currently on March 9th, 2021. The gold to silver ratio is simply a measurement of how much silver it takes to buy 1 ounce of gold. It fluctuates on a daily basis due to the gold and silver prices. There are two separate types of gold to silver ratios. The gold to silver ratio in terms of their rarity in relation to one another, and the gold to silver ratio in terms of pricing. I will be focusing on the latter. In Roman times, the gold to silver price ratio was around 12:1. At the birth of the United States, the ratio was around 15:1. But gold and silver prices in the US have rarely reflected this ratio, and as a result, the ratio has been all over the place for the last 100 years. It has dipped into the teens a few times, 17:1 in 1919, 15.6:1 in 1967, and 15:1 in 1979. In the last couple of years, the price ratio has been above 80:1. The all-time high for the gold to silver price ratio occurred in March 2020 when it hit 120:1. Never ever seen before. I think the highest before that was January of 91, and it was like 93:1, and that was abnormal. On average though, the gold to silver price ratio in the 20th century has been around 45 to 47:1, much higher than its natural occurrence in the earth. Now, as I mentioned, the gold to silver price ratio stands at 66:1, meaning for every 66 ounces of silver bought at spot, one can buy 1 ounce of gold at spot pricing. Much higher than the 100-year average. I have to throw out some disclaimers here. Don't think you can sell 1 ounce of gold and buy 66 American silver eagles. The price ratio is based on spot pricing for each metal. So if you can sell 1 ounce of gold at spot, you should be able to get 66 ounces of silver, assuming it's spot pricing. Gold has always been more expensive and more rare than silver, but this has changed. Recently, the amount of above ground gold and silver has flipped. This is gold that has been mined out of the earth and is in some sort of investment form, whether it's bullion or something else. And I'll get to that in just a little bit. In the last 40 years, silver has been gobbled up by industry for making solar panels, batteries, TVs, computers, even yoga pants. And if you want to know more about silver's uses, I have a video here that you can check out. While gold, on the other hand, it really hasn't been used up or lost. So instead of an above ground ratio of 9 ounces of silver to 1 ounce of gold, the ratio it naturally occurs in the earth, this ratio has been closer to 1 to 5. 1 ounce of above ground silver for every 5 ounces of above ground gold. Gold has become more abundant than silver because silver is being used up so much. What's crazy with the price ratio is how much higher it is versus silver's rarity in relation to gold. Silver is mined out of the earth at a 9:1 ratio. What this means is for every 9 ounces of silver mined out of the earth's crust, 1 ounce of gold is mined. Silver is only 9 times less rare than gold, but its price is 66 times less than gold. Additionally, the silver mined isn't stored like gold is. It's used up in industry, never to be seen again. Logically, the price of silver doesn't make sense, making it an incredible asset to be investing in. With all that out of the way, how can you make your money work for you with the gold to silver ratio? If you want to buy gold, buy silver now while the gold to silver ratio is high. You will be able to buy more gold in the future than you can today when the ratio drops. A lower ratio tells you the silver prices are rising or that gold prices are falling. But when the ratio drops or rises to levels that are considered extreme, trading opportunities are created. When the ratio is high, silver becomes more favorable because relative to the ratio, silver is somewhat inexpensive. Watching the gold to silver ratio is a good strategy to follow when trying to accumulate either gold or silver. You can buy a set amount of gold and silver, flip either metal as the ratio increases or decreases, and increase your holdings without having to spend additional money. Let's do a quick tiny example here. Let's say that you are a stacker who has a tiny portion of gold and silver in your portfolio. Physical gold, physical silver. And let's say you got like a 1 ounce buffalo here and a few silver coins over here. And let's say that the gold to silver ratio rises from its current level at 66:1 and goes to 100:1. A stacker could trade or sell 1 ounce of gold for 100 ounces of silver. And with an American gold buffalo, you're going to have, you might even be able to get a little bit more because the American gold buffalo is such an in-demand coin. It's very popular with stackers. This is why I always advocate for you to stack American gold eagles, American silver eagles, American gold buffaloes, because those are what is really popular. All right, then let's say you got your 100 ounces of silver for your 1 ounce of gold. All right, now you're sitting on 100 ounces of silver, you have no more gold. But then maybe the ratio drops back down to 66:1. That stacker could trade 66 ounces of silver. So instead of trading this whole pile, you trade, got 6 here, plus these 6 ounces, trade 66 ounces to get your 1 ounce of silver back. Maybe you had to have to do a little bit more if you wanted to get a popular coin like the American gold buffalo, but you've got close to 40 ounces of silver left over. And let's say that the ratio drops further. That stacker can use less silver to get more gold. Let's say it drops to 20:1. You can use 20 ounces now to get that same 1 ounce gold piece. And vice versa when it climbs back up again. It's relatively simple to grow your stack without adding additional metals. My stacking plan has always been to transition a portion of my stack into gold using my silver once the gold to silver ratio drops closer to its natural occurrence in the earth. I won't liquidate all of my silver holdings since silver is such a strategic metal. But lately, I've been asking myself, how feasible would it be to transition my silver into gold at these lower numbers? Not only the ratio falling to those numbers, but finding folks to trade with once the ratio collapses. I do believe the ratio will fall. History has shown this time and time again. But I'm beginning to worry about finding those willing to trade gold once the ratio hits an extreme. And not only that, but the time that silver ratio, this gold to silver ratio, is at that extreme. So let's say that it drops down to 10:1. I don't suspect that it will remain at 10:1 for months or even weeks at a time. I think that you're only going to have a few days to act upon this before the ratio climbs up much higher. That's not to say that it can't happen, but I'm just saying that if you're waiting for a specific point that is super low, it might hit it. But for how long? I don't think it will be that long. I think it'll be relatively short. Just like the 120:1. It was at that for maybe a couple weeks before it rapidly came back down. To combat this, I'm thinking about trading my silver positions when the ratio hits 45:1 and gradually release them as this ratio keeps falling. When the ratio climbs back up, I'll trade my gold for silver. what should you take away from this video? Silver is vastly undervalued compared to gold, but most importantly, it is possible to grow your wealth with the gold and silver you currently own using the gold to silver ratio. Let me know what you prefer stacking and why in the comments below. If you made it this far in the video, you guys are all my super stackers, and I really, truly appreciate you. Thanks for watching. This is Campbell's Coins, and that is my 2 cents.